for joining in. The session is being recorded, and I will post this with Carlos a bit later. So we'll do an hour session, take a 10-15 minute break, continuously doing an hour because that way it's easier for us to upload these sessions onto the server. So, whenever you're looking into a play, obviously, you want to play the trend. And today, there's been, movements on both sides, right? Where you could buy puts and then calls. Just kind of having an idea of where to buy calls and where to look for put opportunities. So this is just four little screens. So I'm going to maximize the screen so you guys can actually see just to play. And then we can look at any chart, right? So right now I just have AMD up. I have four sections up in AMD. I have calls, I have puts, I have the 1 minute, and I have the 3 minute chart, right? So, whenever I look at charts, like I'm looking at the 3 minute for AMD, for instance, and you notice this top part over here on the right corner of my screen, the one that I'm actually pointing my main server to. You see that big box that over there at the top? That was a demand, and now that's acting like a resistance, right? So you've seen that we've hit it 1, 2, 3, 4, 5 times on the 3 minute chart, and we haven't been able to break that, right? So an opportunity can occur is if we continue breaking this, we can't break out of this, then you just get into puts, right? So what I have up here is $100 puts on the left lower left hand corner, and this is just a chart, right? So I have my demand um, area, which is in the purple, and then the bottom one, right? And you can kind of notice that as soon as it hits this demand area, it's getting filled up and people are buying into these puts, right? So these puts are about 98, $100, and they're selling about 118, 120. And that's basically been where the resistance has been to sell these puts. Some of these have gone to 133. The high was 160. Um, and that's basically how I like to, just look at things. What I'll do is I'll create like a resistance area. So this is basically this entire section. It's like a resistance, meaning that Um, they're selling these puts once it gets towards that area, right? Like in earlier today. And then you have to keep on looking like, okay, where's the next area that you might see it, being sold off, and this is the next area that you're starting to see selling off, and you're playing it like you would play a regular chart, right? So these are just ideas of, okay, well, if I want to scalp, these puts, for instance, I can get them in this area where it's being demanded, right? So anytime it comes in here, if you notice, since 10:45, it's been eaten up, right? So they're taking these puts in this demand zone. It's just like when we're buying and when we're selling, right? We're selling in the supply, we're buying in the demand. It's the same thing with the contracts. We're buying in demand and we're selling it in supply, right? Sometimes we want to see if it can break the supply and go to the following supply, right? Same thing with demand. If we start noticing that it's getting lower and lower, then we don't want to utilize this demand. We'll wait for the following demand, right? But we want to see it move. We don't want to just kind of see it like a stock going just straight down, right? We want to see these kind of movements because that lets us know, okay, well, buyers are stepping in this area to buy these puts. Same thing with these with the calls, right? So notice that this is a demand area. So anytime it fell in this in the top left hand screen, buyers were stepping in this demand area and buying these calls, right? And they're selling at this top level right here. So we'll make a resistance, right? This is a resistance right now. And notice that, okay, well, you can get in around 110, 108. So this was at 105. I got in at 95 and I sold at 122, right? I didn't, the reason why was because this was acting at that time as a resistance. So I sold it. Um, and then I could have got back in, but I just, I missed that opportunity to get back in, and then I could have rolled it back out at 138, right? So this is a good $30 movement per contract, right? So on a small account, it was just a test theory for me. I wanted to see, how it reacts and what it does. But at the end of the day, profits is profits, right? So this is just an idea. Well, if you look at the bottom left-hand screen and notice that it had, as soon as it didn't even get into the supply and it sold off, right? And we look at the chart and see, okay, well, what's going on, right? So there's lower highs being generated right now, right? So let's just let me see if I can extend the screen out for you guys, so that way um, maximize sell. All right. So this is what's going on the 1 minute, right? Um, and what I'll do is, so that way you guys can actually see, um, you know, everything in hand. I'm going to clear this drawing set out completely, right? So this is fresh scratch. Nothing has happened here. The chart just opened up in the morning. When you do this in the morning, like I said, you have to make sure you have your uh, pre-market, your pre-market high, your pre-market low in there, right? So that way you can start off the day fresh. Now, I'm going to clear out all my studies for this section, so that way it's just a regular chart, right? So we're not looking at EMA 9s, we're not looking at VWAPs, we're not looking at any of those things right now. We're just looking at the chart as it is, right? So what you want to do, obviously, you want certain indicators on your chart, but not everybody knows how to use indicators. Give me 1 second, sorry. So what we do is like, okay, well, the market opens up and we start seeing, okay, well, we have the pre-market movements going on, right? So, just like I explained to you guys earlier, in a different session, was that mark where your pre-market low is, mark where your pre-market high is, and that way you have an idea of how to, kind of look at the chart just for the time being, right? It doesn't mean that we're going to play off of these levels, but pre-market shows a lot of movements and it helps, right? So we know that this is a low right here. So what I'll do is that, well, this is where also the demand is, right? Because if you notice, this is where the run up started, right? In the pre-market. So we can make that square, I'm just going to put it out here and then I'm just going to extend it out, right? So I'm going to use only Thinkorswim. I know you guys have Webull and, and other charts, but I'm gonna play it off of just off of what I'm comfortable with, just because you have to see and analyze it in different as a chart, right? Like Webull is great, but I can't chart it the way I want to chart it. But it's the same concept, right? I showed you guys how to do this previously. It's the same exact concept. Now you just mark your high for the pre-market high, not where your wick is. This is area right here, so I'll mark it. Hey, this was my pre-market high um, earlier in the morning, and then we start off the day, right? So now when we start off the day, we notice that, hey, well, oops, sorry. We'll notice that, obviously this is at 9:30 on the dot. It came all the way up, right? So you want to see how, where it goes in the morning. You don't want to really get into calls or puts at right away. What you want to do, it's going to be a very interesting concept that I'm going to teach you guys on how to look at the morning chart and how to play it, right? So notice when it opens up, you want to see where the high is, right? So once you start noticing that in the first 5 minutes, which is right here, in the first 5 minutes, you already have your candles set up, okay? What you want to do is you want to look at where the high is and the following candle prior to the move. And at the base level, which is right here, you're going to draw a trend line, right? At this base level right here. Sorry, that was not the right one. Here it is. At this base level right here, you draw that trend line. What that does is, like, say for instance, you want to get into puts, right? You want to see how this trend line at this base works for you, right? So you see how after it drops out, you want to retest. You always want to see it come back to it, right? Like you want to pull back. Because generally it happens, right? Especially when there's a high in the morning, you'll have a pullback. Here's your pullback. You want to look at, like I said, confirmation candles, right? The following candle, notice the wick at the top, right? That means that it was not being able to push back up to this level right here. So Sometimes you could get into puts at this level, or you kind of wait it out until it crosses this line back down, right? Here it is, right? So you cross back down. This is your entry for puts, right? About here, right? So you could get into puts here after it, this is confirmation that it came out. Now, some people are like, well, will the wicks happen? Okay, well, wait for the following candle, right? The following candle, what happens, right? It closes out of all these wicks right here, right? So you can then make a little trend line prior and say, okay, well, I see all these wicks at opening. Here's all my wicks, right? So you can make a little trend line at the wicks. You can make a trend line right here at these wicks, at the long wicks. The long wicks, basically, what that is that the sellers at that time could not, basically the buyers were just eating these up, right? And the sellers basically couldn't just bring it down, right? So these are the long wicks. Same thing on the opposite side, right? So when you start seeing this movement and you start seeing these long wicks happening, make a little trend line right at the bottom here too, just in case if you feel like you don't want to get into puts simply because, well, you saw these wicks coming back up, right? Then you could get into puts at this level right here prior, because you saw all these wicks getting filled on this candle, right? So you had your opportunity to get into puts right here at this level. Sorry, where is that? Right here. Here we go. At this level right here, and then over here on this candle. All right. So now you get into puts. Notice this is your pre-market, your low, right? So there's going to be some sort of demand in this area. But what you need to see is that, remember, you created this line right here, this trend line at the bottom of this wick right here. And notice that even if you miss out these opportunities and you're seeing, okay, well, it bounced off of the demand from the pre-market. And where is it getting rejected? It's getting rejected at the bottom of that wick at the morning open, right? Notice that it got rejected here on the 1 minute, it got rejected again, it got rejected again. So if you start noticing that it's getting rejected and it's not going above this line that we made off of these wicks, you have another opportunity to get into puts over here. You had opportunity to get to puts here. You had opportunity to get puts here, right? So there's 1, 2, 3, 4, 5, 6 areas of opportunities for you to get into puts if you missed out on these puts over here, if you missed out on the puts over here. Notice because all these candles did not close above, above this, these candles right here, right? Which is a significant saying that it's going to go down. It doesn't mean that it's not going to come back up at that time period, but whenever you start noticing these kind of things, right, that's when you know, like, okay, well, I can get into puts, and then you'll have a nice little stop loss just in case if it reverses on you. But this is the same concept that happened yesterday. We saw the same exact thing happen yesterday, right? So understand how to play in the morning if you want to play in the morning is the same way, right? So this is nothing like, we're not looking at anything that's happened after, after 10 o'clock. We don't know what's happening after 10 o'clock technically, right? Because we're in this area of setup right here. But this is just creating off of 1, 2, 3 trend lines from the first 10 minutes of the morning, along with your demand zone from the pre-market, right? It was acting as support all the way until 10 o'clock. And now once you start seeing it fall out of demand, what's the next opportunity? You can get back into puts, right? If you missed out on all these opportunities right here, these 1, these 3, 4, 5, 6, 7, 8 to 10 areas where you missed out on puts, you can get in the moment it breaks out of off of the demand. But what do we always say? We always say that we want it to retest the demand zone, right? So if you missed out, obviously you never want to chase, right? Because what happens later on? It came back and it retested the demand zone, right? So if it retested the demand zone, and notice that none of your candles, right? None of your candles closed above the demand, right? It got stuck in the demand. You see the long wick. These are called tweezers because there's two. It closed and opened at the same. The candles closed and open at the same area, and you had wicks on top. That's called tweezer top. So that means that it's an area of opportunity for it to come back down, right? So this move right here, if you miss all these opportunities, right? You don't want to get into puts when you start seeing these candles just coming straight down. You never ever want to get into puts at these moments, right? Because this is called chasing. Mind you, this is on the 1 minute chart frame, right? We haven't looked at the 3 minute or the 5 minute. This is just off of the 1 minute. So on the 3 minute, this is just one candle, right? So you don't want to you don't want to, because what happens is that, notice how you start seeing this work and you get FOMO'd out, and now you're like, shoot, maybe it's gonna come back up, and then you sell your puts, right? But when you get into puts at these high levels over here, you're sitting comfortably, right? You're sitting very comfortably, because then what you want to see is new highs, right? Okay, so if it's coming back up, where are the highs at? You notice how it came up over here. You're like, okay, well, it got rejected, and where? In the demand zone, in the pre-market demand zone. This is why it's very important for you to draw your, your demands. So if you would have gotten to puts on these levels right here, you'd be doing really well. Even though it hit this demand, it did not go higher, right? So you could go back into puts here. And from here at 203 all the way down to 2220 into 231 is almost $1 of a drop, which is one delta of the puts that you are in. So if you have a delta of a put of the delta is $40, you just made $40 off of that play per contract, right? Just because it got rejected out of the demand zone. And then, notice how it came back in. And this time, what did it do? It actually went above the demand, and it kind of stopped in this area, right? So now when you start noticing this, right, you start noticing, well, okay, now it's not the demand. Do I get into calls? Not yet. Why? Because this level right here has not been tested at this time, right? I mean, now it is, but we're looking at, time frame at 1048, right? It has not been retested. That's where the high was, right? This was where the high was after the initial drop. Here's your high, your another high, and your other high, right? Notice all these highs. Let me draw this out for you guys. All these highs right here, if it lets me. Oh, sorry about that, guys. Sometimes this TOS thing does make an impact. Doesn't really work as well as I like to, especially on the Mac. There you go. See if I can get. All right. So here's your high. Here's your high. Here's your high. Right? So notice lower high, lower high, lower high, downtrend. This is your downtrend, right? That's how you notice that it's in the downtrend. What happens over here? It's another lower high, right? So you could keep marking all these lower highs, and you'll start being like, okay, well, when do I get into calls or whatnot? We'll discuss that, right? But I'm just showing you how to play just off of the opening market, right? So you had opportunities on all these levels over here to get into puts, even over here, right? But the moment that you start seeing that it comes out, now you're going to know that it's going to try to, consolidate in this area, right? So that's all it was doing, consolidating. But here, look at now let's go back into the current real quick. You see where it got rejected? Right at this price level, at this long wick in the opening, which is very crucial, right? This is very crucial. Why we don't get into calls right away, or why we don't get into certain puts right away. Because if you're able to draw out, from the beginning, you'll be able to play the chart so much better, right? This is nothing like, like I'm showing you something from scratch, right? So we're not looking at EMAs, we're not looking at VWAPs, we're not looking at any kind of indicator whatsoever. I am showing you from scratch how to look at the market in a complete different way, right? All we did, four things. We drew a demand zone from the morning. We drew at the bottom of the wick that trend line. We did the same thing at these 3 wicks over here, and we did it at the high, where the high was the candle prior, the base, right? Here's the base of that candle. That's all we did, right? So areas of opportunity for for puts. And notice how this trend line right now is acting as resistance. This is current right now. It's acting as resistance. The candle yet has to close above this area right here, right? So what you want to start noticing is that, okay, well, can it close above it, right? So the moment that it goes above, see, these are long wicks, right? So this still has not closed above here, right? So basically, it just finally, sorry about that. It just finally came back to the third lower high of the day, right? Finally came back to this one right here. It still has to go here and it still has to go here, right? But right now, it's trying to make a recovery. We're not saying it's going to make a recovery. We're saying that it's kind of making a recovery, right? So what we start doing is like, okay, well, how do we know if there's recovery is going to happen, right? So you start looking at your wicks at the bottom. Here's your wick right here, and did this is higher than the bottom ones, right? So that means that okay, well maybe this is acting as support. All right, here's your next one right here. So right now we're creating new lower highs at the same time, sorry, new lower lows at this new higher lows at the same time, right? Here's all the all your drops. So here we go. Now you want to see, okay, well, does this hold right here, right? That's what we're looking for. Does this hold? If this does not hold, then we could potentially get back into puts, and the puts will retest the demand zone, right? If it breaks out of the demand zone, we'll start testing, the previous higher lows. That's all it is, right? So by you just being able to play just off of these trend lines and the demand zones, right? You're going to be a much more of a successful trader, okay? So I'll give you an example. Sorry. So when I got into calls was right in this level right here in the beginning, right? And I got in because, like you said, you start noticing all these wicks at the bottom, but this was an area of demand uh, from previous, what do you call it? From previous days, right? So we noted that 99, 98, 100, 101, 66, 167, I'll show you how to look at that, was an area of demand, which is why I had a demand zone already built in over here. Now we know that we had that lift off here, right? So we say, okay, well, this is going to be your demand zone, right? So to right now, this entire section at the base. I don't like doing the wicks because the wicks is just basically comes out and then it comes back in. But just because of training purposes, we'll go ahead and we'll uh, make this demand zone a little bit longer for you guys. And then I like to color code it so that way I know what it is, right? So this is my demand zone, right, at this level. Anytime you have a pop up and then you have your drop and then you have another pivot, this is going to be another demand area. It's going to be a very small demand area, but these are little demand areas that you can make yourself if you like, right? I'm not going to do it simply because I like to play, give myself extra room to play, right? So the more demands you have and the more supplies you have, you're limiting yourself to more profits, okay? So notice that this is my demand, this is my pre-market demand, and right now where it's at, right? These are where that drop started initiated from this area right here, right? Obviously, this is the main first drop, but then it kind of rebounded, and then here you go. This is your tank, right? So right now it's in the supply area. This is the supply area, and look where it's at, right? We have yet to suppress this. Notice, remember, I said that if we break out of this, right? So this low, this higher low has been invalidated, right? Because now we have a new higher low. I'm sorry, new lower low from here. But if you want, you can also notice that this is going to be like an area where you can try to get into puts or calls, right? Because if it can come back out of this, you can potentially retest this area. But remember, I said that if it drops, where can it potentially drop down to, right? Look how we are close to this demand zone, right? So we have to see, okay, well, is this going to be the stop of this? Is this going to be the next leg down, right? That's how you got to play the chart. You don't have to worry about, like I said, you don't have to worry about your indicators, right? If you don't know how to use indicators, or and you wanted to, you want to get in and you want to get out, without without stressing yourself. This is how you do it, right? So I'm like I said, I'm not using any fancy things, right? I'm playing it just off of a plain blank chart. That's it, right? I'm not doing anything different. And you can do the same thing, right? You just have to make sure that, hey, well, where is the demand? That's a huge important thing. Where is your supplies? That's very, very important, right? Because your supply means that sellers are coming in and they're going to buy it, they're going to sell at that level, right? Demand is like, okay, well, this is where areas that buyers are going to step in, which was right here at the 101.71 area. And right now, this is the area where there's resistance, right? There's this supply area. So we have to see, okay, can it break out of the supply area? If it breaks out of this supply area, where's the next stop? Understand that whenever you get into a call, whenever you get into a put, you have to know where it can potentially go, right? You do not want to just get into something and not know, okay, well, where's your exit strategy? This is right here that we've made is your for the morning is your entry and your exit strategies, right? So getting in over here, your first exit strategy is your demand zone, right? And you want to kind of see how that plays out. If it breaks, perfect, right? Then you go into your main demand zone that you should have created further back out. And that's exactly how you do this, right? So if you get into calls, where is your first exit strategy? My first exit strategy was where? The demand zone, right? Which is where I got out from here, I got out to here, right? That's my first calls that I got out of, right? Because I knew that once it gets into demand, it will probably reject. And it rejected. And it came down. I could have got back into calls, once it kind of, it didn't fall back into this demand, but I wanted to see and play the chart out. I don't have to consistently get back in and out, right? But what did I say? If it rejects this, where did it go down to? It went down to the demand area and it went out of the demand area. It's still right here. Look at this, right? This level right here. Look where it stopped out. I'm not doing nothing different. I'm just doing it exactly where the low lows or look where it was. It's matching it. Now this got rejected. Where could it potentially go to? So if you got into puts out of this demand zone, where can it potentially go to? It can potentially go to right about here again, right? So let's just extend this one out. Here it is. Let's just extend it out, right? It could potentially go to here, right? But you have to have an exit strategy whenever you're getting into a position, right? Know that, right? So if I got into puts, if I got into calls here at this level, my exit strategy is going to be this demand zone, right? I can, depending on how many contracts I have. If I have multiple contracts, I will let it, I'll sell, I'll scale out, right? You never want to try to just sell everything at one time, okay? That's where most traders go wrong. You never want to buy everything at one time either. That's where most traders go wrong, right? You can always pay a little bit more as your trend continues, right? It doesn't mean that you have to always consistently wait for it to come back to get into, your positions that you paid. It's okay to average up, right? But it's not okay to, to like, okay, well, I got 10 contracts. Now you got 10 contracts over, say for instance, you got into puts over here, right? And now you saw it come down and you're like, and you start coming back up. You're like, okay, now let me average down. No, why are you going to average down on the trend line up? That makes no sense whatsoever, right? You never want to do that. You want to wait. You want to see, okay, well, this is your demand. Let me see if it, does it come out? Does it not come out? Okay, well, oh, it got rejected here. Okay, maybe I could average down and get out, take those, once you start seeing that it's coming right back out. Like I said, I don't average down, right? I basically get my contracts, one. So the way I do it, I'm going to write it out here for you guys. And it's up to you guys if you want to do this or not. But the way I do it is this. First entry, 1 or 2 contracts max. This is if you're doing 10 contracts. Second entry, 2 contracts. Third entry, 2 contracts, right? So you have 2, 4, 6. Last entry, 4 contracts, right? That's 4, 6, 8, 10. If you only got 1 here, then this third entry will be 2 or 3 contracts. That is how I do my contracts, right? I don't do anything else different. This is how I do my contracts. I have that written out for you guys right here. First entry, 1 or 2 contracts, max. Second entry, 2 contracts. Third entry, 2 to 3 contracts. Last entry, 4 contracts. The reason being is that you don't want to put yourself in a situation where you get 10 contracts and now you're down 10% or 20% and you're like, shoot, what do I do? Right? Do I FOMO and buy more contracts? Do I sell it for a loss? What do I do? If you if you go that route where you're buying in minimal contracts, but you want to get 10 contracts no matter what, you split it up in 4 ways. And the same concept when you're selling your contracts, right? Just like you buy contracts, it's the same way, right? So what I do is that if I hit my demand zone and if I have 10 contracts, I start scaling out, right? So I'll sell 2 contracts here and then I'll wait it out. If it hits back up again, I'll sell another 2 contracts, right? So I do incrementals of 20% or 25%. That's it, right? Um, so I'm going to write this down too because this is going to be very important how to scale out of your contract. So scale out of contracts. All right. So this is a key lesson that you guys need to understand, right? If you see a 10 to 20% increase on your contracts, you scale out. So you can sell 1 to 2 positions. Okay. Then what you do is that the other contracts, your 8 contracts, you have a stop loss at break even because you never ever want to let a trade go what? Red, right? Never let a trade go red. All right. Now you see your contracts are up between 25 to 40%, right? Same thing, right? You scale out. You sell one, one or one or two, and then you move your stop loss to 15%, right? Because you're already up 25 to 40%. Never let a green trade go red, right? You're not trying to hit home runs, right? That does not happen. You want to secure profits, okay? That's basically that one. Now, anything above 40, so now we're up at between 40 to 50%. If you are up, scale out, sell 1 or 2, move your stop loss to 30%, right? Anything above 50%, 50 to 75%, you scale out, sell 1 to 2, move stop loss to 40%, and then 100 plus runners, right? So you should only have 1 contract left, right? So sorry, I forgot to do 75 to 80%, keep 1 contract, sell remainder. All right. Now, because you sold your remainder contracts, you only have 1 left. You do your stop loss. This is going to be different. You do your stop loss at 50%, right? Because you want to let that 1 runner go and maximize as much as profit as you can. So no matter what, like I said, like, yeah, you can still lose out on that additional profit, over that 100%. But if it's over 100%, I'd like to do my runner as a stop loss at 50% because I'm still going to make profits off of it, right? I'm not going to get greedy and be like, well, I missed out on areas of more profit. It's not about that, right? It's all about, trying to get the best out of it. Now you can move that last stop loss obviously up, right? You don't have to, you know, uh, keep it at 40% or 50%, right? This is just something, like I said, like I like to do. Doesn't mean that you have to, do the same thing, okay? So let me just try to put it in a color that you guys can potentially, no, that's definitely not going to be it. We'll do it in green, if you can see it in green. All right. So here's your, the notes on this one. Here's the notes over here. All right. So you don't have to follow these rules, right? This is just my personal rule, right? So, but notice, right? Like there's nothing that I've said that has not happened, right? I said that if we break out of here, where we're going to test, we're going to test this demand zone, right? Notice that, okay, well, this broke, right? It did not hit this area, right? So if I got into puts here and I saw that, hey, this did not hit, I would start scaling out of my puts, right? Simply because, I got into puts way too late if I waited over here. At this level right here, which was 103.89, you've already made 100, like this is already one delta, right? So it's like 40-50 bucks. But I would have only got one or two contracts at this time because you're playing with fire, right? You already know that this is acting as a as a demand, not necessarily, but it's still there, right? Like we have not fallen out of this demand since we came in here, right? We're still testing this demand zone. This is your pre-market demand zone. Can you review Oxy chart before? Yeah, of course, definitely. I'll definitely review that chart for you in a bit. So, screenshot this if you guys want. Like I said, this is going to be recorded so that way you guys can have this. Because I can't screenshot it right now, simply otherwise it will stop the recording, right? So if you guys want this, and you guys just want to write this out or whatever, screenshot it. We'll come back to AMD in a little bit. I'm just going to pull up Oxy for somebody. Here's Oxy. All right, so Oxy on the 1 minute. First, what I'm going to do is I'm just going to take a look at the daily, just to kind of see it, so, right, I've never done an Oxy, and this is going to be where it's going to be interesting. All right, so this is my daily, and I'm just kind of looking at where the lows were. This is your high, your lower high. Still hasn't broken out of this area right here, so what I'm going to do is just from here at this level, I'm going to actually go into that day. What day was that? The 28th. So I'll go into a 1 hour chart. All right, so I'm going to go into a 1 hour chart, and I want to see where my demand zones are for the 1 hour charts, right? This is important, especially when you don't know a play, or something that you've never seen before or whatever. You have to know where your demand zones are, right? So I go a little bit further back, just kind of have an idea. Okay, well, I start seeing this run up over here. Here's my run up. So I'm going to create this section right here as a demand, and I'll move it out all the way. This is March 16th, right? So I'm looking all the way back to even March 16th for this, right? So this is demand 316. Okay, so I'm going to put 316 demand, and I'm going to see where the next demands are, right? I'm not looking at supplies yet, right? Because, we have different top areas, right? But I'm looking at different demand zones. And so here's that run up. I'm like, okay, well, is there a run up here? This is pre-market. Don't really like it too much. I'm going to come back this way a little bit more, and I'm going to see where is my next big run ups, right? So I see that, here it is, square. If I can get my square. Why is my square not working? Come on. Oops. And this is right here. And I do it at the top of the base. And then I'm going to extend this base out. Today is the 10th. What day was this one? This is a 28th. So this is 328 demand. All right, that's moved out. Here's this main one too. So this is just a kind of, it has a nice green big candle, right? But this is where the initial, run started right here. Look at, this is your initial one, a little bit ahead of this one, right? So what I'll end up doing is I'll move this one up higher, right? You can move it up higher, that's fine. Here it is, I'll move it up higher. So I'll move this one up higher based off of this movement right here, okay? I'm not looking at today's yet, I'm just looking at previous days. And I'm looking at, okay, now I'm gonna start looking at my my supplies, right? So I want to see what the big sell-off happened. Here's your big sell-off. So I'm going to mark this entire section right here. And I'm going to move this out. And this is on the 24th. This is supply 24. All right, so let me just explain about the supply, right? So supply is basically when you have a top or you have a good movement and then you start seeing a sell-off, right? This is a sell-off. So whenever you're looking at supply, you want to do it from the base of both ways, right? The high of the base and the low of the base, right? So this is a low of the base. I kind of wanted it to do it at the wicks. So here's my wicks. Technically, I can bring this down. I should bring it down a little bit further, which is right about here, because this is the base of the high, right? And this is the base of the low. That's how you make your demand. I mean, your supply. This right here, see, it's not really considered a supply because it came back right into this area, then a sell off, and it just kind of, did its own thing. And then you see over here is where your main rejection happened, right? Because it didn't test this area again. You can still make this because it still relevates here, right? So there's no difference. But I like to do it when I start seeing an actual sell-off, right? I see the green and then I see a sell-off, right? So this is like another area that I like to see is right here, right? So from this base of this candle, well, we can do it from the high from here and the low next to it, right? So this is your other area of supply that you can create. All right, this was on the 24th. Supply 324. All right, so that could also be your resistance, right? So supply resistance, look at your wick here. We didn't do nothing different. We just kind of played it out, right? And when do we see another sell-off? Here's another sell-off, but it's right at this level. We start looking further down, and here is your next one, right? So this looks like an area, and I don't like to do it too long. That's just way too much for me. I like to do it at the base, right? So I'm going to do it at the base, and I'm going to just extend this one out. And this was on the 4th, right? So 4-4. This is more of a resistance. So supply of resistance is very similar. So supply of resistance is basically, this isn't the actual high. This is basically in resistance area. Your supply is when it's like at the most peak, right? Like it's harder to, it's like at the peak basically. Like when you're playing basketball, whatever it is, this is your peak, right? This is your fourth quarter. So let me just edit this one out, and I'm going to make this into a different color so that way I don't get confused with my demands. And then always, right? So once it breaks through, so say for instance, this breaks above it, this will become your support area. If it breaks below, this will become your resistance area. All right, so we did that. Now let's look at the actual chart itself, right? So notice here is that supply from 4-4 resistance, broke out of it. Here's your demand from 328. And without even looking at the chart, right, what is it doing? It came in, it's trying to reject this demand, this supply, and is back down again, right? This is from yesterday. Now we're looking at today, right? So without even looking at the chart, without even going into details about the chart, just know what it's doing, right? Like you can see that, okay, well, it got bought up at this demand zone. It peaked right here, right? But now we want to look at the pre-market just to kind of have an idea of how the pre-market movement happened, right? This is always, always very important, right? I'm not going to do anything different. I'm just going to look at the pre-market. This is where it got bought up right here, right? Notice why am I putting it right there? Here, let me zoom in for you guys because you guys need to understand this. All right, so here is the drop, right? So you start seeing the drop and the buying happen, right? So this right here became a demand area, right? Meaning that anytime it came in this area, see right here, it got bought back up, right? So you make your demand zone from this level right here up to the bottom of this candle right here. And then you extend this bad boy out and you say pre-market PM demand, right? This is your pre-market demand. Press OK. All right, where was my high? Okay, so we kind of look at it. This was a high right about here, which is 57.12. Because there's no, there's no supply or demand, I'm just going to, I do a trend line at that level here, okay? And that's it, right? I'm done with that. Let's see how it opened. Here's your opening, right? Here's your opening right here. Came out of that, dropped right out, dropped into my demand zone from the pre-market. right? Failed the demand, came into the major demand from 328, right? And see, here is where it just kind of tested it out. It broke. So when you start seeing these breaks, right, you want to get into calls at this level right here. Once it breaks and it holds, right, this is where you can get into calls once it breaks and it holds. Because this is an area where even if you do, like I said, like the trend line that we did earlier, here's your top and your drop. You do it right here at this base level right there. That's where you know when to get into calls and then when to get out of the calls, right? If you feel like this is going to reject, that's all it is. Nothing different to it. That's all it is, right? Demand zone, right? Dropped out. If you wanted to get into puts, you wanted to test this. Here's your test. You get into puts right here, right? You get into puts. This is puts at 56.52, and but you know that demand is so close to your so close to it, right? So I personally probably wouldn't have gotten into puts at this level because it's so close to this demand that I would wait for it to fall out of this demand, right? This is such a huge demand zone that we should technically, reduce it. But this is from a previous chart, right? So I didn't do anything different to it. Now, if I'm looking at, because he's asking to take a look at it, right? So this is a major rejection, right? So being that this is a major rejection, it's right by the supply area, what I would do is the same thing. I want to see it basically at this level is where it broke. So here's my trend line. I do it at the bottom of this base, like we did this morning on AMD. You do it at the bottom of this base right here, right? So if I feel that, okay, morning happened, it is getting rejected here, I would wait to see it break and base above here to get into calls, but this is your resistance area, or break and base to get into puts. So for puts, I would just, like I said, you have to play two different ways, right? Got a customer for one. Yes, this is recorded. So this is definitely recorded, right? So if you want to get into puts, like I said, I play it off of my baseline. So if I get into puts, it would be the moment it broke, the retest. Here's your retest. I would get into puts here. I would just let it ride, right, until it broke through, right? You could have got into puts here and then puts right here, right? And where is it at right now? It's on pre-market demand, right? Pre-market demand. Do I want to get into calls? Absolutely not. Not yet. Why? Why do I not want to get um, into calls right now? Okay, I'll tell you why, right? What did I say earlier in AMD, right? We want to see this is lower high, right? Look at where all your lower highs are at, right? Lower high, right? Here's your top, here's your bottom, here's a little pivot, lower high, comes back down, lower high, and finally this little high right here, right? But for me, this is not an area to get into calls yet because I want to see it come back and I want to see it reject. I want to see it come out of here and I want to see it base on here for an upward movement, right? So where is going to be the resistance? Okay, well, here's your resistance. Intraday chart, here is your resistance. This is your first resistance, right? And this level right here. This is going to be your first resistance. Your second resistance will be at this level right here, right? Your next resistance will be at the start of, let's see, this is your high, came back down, drop, came back down. This is going to be resistance right here, right? Where the choppiness was happening. These are going to be your resistance levels, right? So if you know that, hey, well, it's going to break out of this, more than likely it'll test this. For me, it's not a big enough movement, right? This is from 57.30 to 57.45. That's not a big enough movement. So for me, I wouldn't even care for this one, right? So because it's so close to this demand, I will wait for here and then potentially test this area right here, right? This is a potential test. Instead, what I'll do is I'll just do a little trend line right there, right? So I want to see how it reacts. Notice that high, low, right? Has it got to my lower low yet? Not yet, but it's in the pre-market demand. That's all it is, right? I'm just playing off of a few things, which is your pre-market demand, That's it, right? I'm just playing off of very, very simple things, right? Pre-market demand, your demand zone, your supply zone, and how the morning uh, lines happen. Look, this line, look where it is right now, is acting as a support for now, right? It got resisted over here. It's acting as support. It acted support, right? From this morning line, I didn't have to look at anything else. I didn't have to look at any other indicator, right? That was it. This is it. Like, I'm showing you this from scratch, right? I'm not making shit up or whatever. Excuse my French. I'm sorry. I'm not making anything up or whatever, right? This is just from scratch. This is without me even looking at what Oxy does generally. I don't even know, I never played this one. I never played Occidental Petroleum Corp, right? But just by making these things, I could able to get into calls or puts, right? Because I see that this was your, that resist, from the base or whatever. Once it broke out, you could potentially get into calls because it would test this area right here, breaks out. The next stop would be the demands area, right? Which is basically up here. We want to see, okay, why did it stop at this level, right? Why did it stop at this level? So what I do is that, okay, well, I'm going to create a trend line. And I want to know personally, why did it stop at this section here? So I would extend it to the opposite side and I would kind of go back, right? This is how I play it. I just like to see it, right? Because I want to know why did it do that. I'll move it out to a 10-minute chart frame and I would just look at it, right? I'm like, okay, well, what happened, at this line level, right? Why did it do that? Ah, this is from the other day. This is from Tuesday, right? Look at Tuesday, how we open up. And remember when I tell you guys, create your little lines, this was an area where that drop out from the demand almost touched this area, right? This is your, your run up. Okay, that looks good. What else? Right here. Here we go. This was your top. This is your base. This is where it was consolidating. Consolidating at these line levels. Okay, now I know why, this line got rejected, right? Because this is where the consolidation was previously before the drop, right? So that area has been tested numerous amount of times then for the last few days, right? So good area to look at. Like, okay, cool. Now I know, right? Now I know why this line was important. Okay. I'll just keep that. Sorry, I'll just keep that there, and that's pretty much it for that part, right? So I'm going to take a break. It is 12 o'clock. I'll take a break for like 10 minutes because I want to make sure that this is being recorded, right? So, yes, Batia, everything is being recorded, right? So I'm doing a session every, for an hour, take a 10-15 minute break, come back for an hour. Same thing, so that way we can record and keep these sessions active, right? So for you guys to look at. So like I said, like, we'll take a 10-minute, 15-minute break. So 12:15 Eastern time will be back. We'll be back on. You always want to take a break from the market, right? That's just clear your mind. You guys can stay on here. I'm not exiting. But 12:15, I'll go back live and then record part two of the session. If you guys have questions on any other, anything else, just post it and we'll look at that. All right. So I'll see you guys very, very shortly.